Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And it is the final day of the trading session. And while globally we do have Israel-Hamas reaching a ceasefire agreement and hostage exchange, wherein the oil prices have eased, pricing in the tensions cooling off in the West Asia, the gold prices have retreated from its record high levels. But back home, we also have our own cues to react to. TCS, yes, that's a big headline today, and IT stocks so far this week has been quite resilient. If you look at the September quarter numbers, revenue and margins have been beat, revenue particularly rising modestly after 3 quarters of decline, and margins too have expanded on a sequential basis. But remember that the company had plans to lay off about 12,000 employees, out of which they have cut 6,000 of their workforce, and that's why there has been a hit to the bottom line on account of their restructuring cost and severance payments that the company has to make as well. Now, where do the brokerages stand? They have been quite mixed on the counter. While they have appreciated the fact that there is some revenue recovery which is seen in the September quarter and which could bode well for the upcoming quarters as well, but they remain still quite watchful if growth in the core markets would recover from here on and if there is any meaningful recovery in the discretionary spends as well. Also, the street will be watching out for the company's decision to expand its AI play, which earlier it has remained quite conservative with. For instance, TCS announced a massive $6 to $7 billion worth of AI data center and a rare acquisition where they have said that they plan to be world's largest AI-led tech services company. So the street will be watching out on how the company talks about its AI plans in the coming future, and we'll be watching out for the rest of the IT sector as well. But yes, apart from TCS, Tata Elxsi, that will also react to its second quarter performance, and do watch out for its peers as well. For instance, your KPIT Tech and Tata Technologies, how they fare in today's trading session as well. Now, how all of these cues will set of the tone of the trade today, we'll be watching out for as well, because so far we have seen that Nifty IT index has surged about 5% already. But yes, the stock specific action will continue, and we'll be watching out for more as well. For now, the pre-open rates at this point of time is looking at, it's a very quiet start for the markets. Sensex is down about 94 points. Nifty is also trading above that 25 100 odd levels. But yes, we'll be also taking your stock related queries, so keep dropping them on our live feed and we'll address them with our experts like usual. Moving on, let's take a quick look at the top headlines, Sasa. Wall Street ends the session lower with S&P 500 and NASDAQ pullback from record highs as government shutdown completes its 9th day. Asia-Pacific markets trade lower, tracking Wall Street cues. Meanwhile, the GIFT Nifty is indicating a marginally lower start for our own markets. Oil prices ease as geopolitical tensions in the West Asia ease. Meanwhile, gold prices have also cooled off after Israel-Hamas reached a ceasefire. TCS surpasses estimates in the second quarter. Margins and revenue in constant currency terms beat expectations. The company has also announced a massive plan to enter the data center space to build up to 1 gigawatt of capacity, and also says that it will be addressing major acquisitions going forward. And Prime Minister Narendra Modi speaks to US President Donald Trump to talk about the success of the Gaza peace plan. US Treasury Secretary announces that India will soon be buying less of Russian oil and more of US oil in the coming months. This comes as the trade standoff continues between the US and India. All right, coming to yesterday's trading session, we did see that the Nifty did end near the day's high level after the 2-day sell-off that we saw for the benchmark index. And so far this week, Nifty is already up by about 1% itself. All the sectoral indices ended in the green, and the major power lifter, that was your IT index, and we'll be watching out for TCS numbers, how they are going to react in today's trading session as well. Metals and Pharma, they were also one of the pockets that saw some buying interest in yesterday's trading session. But yes, amidst all the action that we have seen in the IT stocks, Bank Nifty, however, continues to see a little bit of a sideways momentum. However, it's still holding firmly above that 56,000 mark itself. But yes, like I was mentioning, IT index up about 5% so far this week. TCS results has beaten expectations on most accounts, and we did see in yesterday's trading session, Infosys and Wipro ADRs did trade up to about a percent higher as well. But yes, we have started off with the earnings season. We'll get deeper into it, and today we have more results reaction which will be pouring in. We have Varid Renewables and Elcon Engineering which will be reporting their September quarter results. And apart from the buzz that is there in the secondary markets, the primary markets continue to remain quite busy as well. We have a new IPO which will be opening subscription today, that is your Canara HSBC Life, which will be opening its issue in today's trading session. But yes, yesterday we did see that LG Electronics IPO that saw the highest subscription so far this year has seen 54x. That is where the number stood out on the day 3 of its IPO subscription numbers as well. And this is one of the highest ever bids that the company has seen after Reliance Power's mega IPO, which was launched in 2008 as well. So yes, good subscription numbers that came in for this particular company as well. But yes, we also have WeWork India, which will be listing on bourses today. So far, the unlisted markets are pointing out to a flat listing, but we'll watch out how this particular counter fares on the bourses today. Coming to the cash flows position, where the FII and DI stood yesterday, FII stood as buyers, buying stocks which was worth about 1300 crore rupees in the cash markets. DIIs also bought stocks which was worth about 943 crore rupees in the cash markets as well. Coming to the put call ratio, that has risen to about 1 from 0.8 levels in the previous session, and RBL Bank that continues to be a part of the FNO ban as of now. But yes, like I was mentioning, the pre-open rates still indicate that it's going to be a very quiet start for the markets. But of course, if you look at the last 3 trading sessions, the pre-open rates have been pointing out as so. But we are hoping for another green screen today. But with that, let's quickly move on with our technical expert of the show. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, yesterday we did see that Nifty has once again reclaimed that 25,100 levels. What can we expect next moves to be for the Nifty and of course for the Bank Nifty as well?
Yeah, good morning, Lovisha. Thank you for inviting me to the show. So when you're looking at the markets, there is definitely a sense of confidence that we are able to recover from the lower levels. And that's what we have been seeing over the last few sessions, where we have somehow managed to stabilize in the month of October. And moving almost to the mid of the month, we are able to hold on the 25,000 mark. So I feel that 25,000 will continue to be a key factor in the coming sessions, and unless and until we go below that, every dip would continue to be a buying opportunity. Now at the higher levels, all these levels are basis on the Nifty spot. So 25,300, I would be keenly watching it, because at the current juncture, it is trading sub 25,200. And I would say that a rise today could carry it towards 25,300, and a close above that would open doors towards the 25,600 mark. So yes, it is at an interesting stage right now. And with the kind of positive cues, like you rightly said, unlike the last time where TCS and Tata Elxsi that came out and they started the result season on a negative note, this time somehow the recovery has been better. And like even the brokerage ratings which are coming out since yesterday evening, it's clearly indicating that there is somewhat a positive outlook on the IT. So if the other IT names also are in line with TCS, then we would see a strong rebound, which you have already seen in IT, to continue. So overall, IT could take some attention from Nifty and Bank Nifty and Sensex if this trend is going to continue, and it will all depend on the forthcoming results. But then TCS has started off on a good note. Now Nifty has got a lot of several components. While the Nifty was thinking about 25,000, there were a lot of stock specific action that were in play, largely due to the result season and also due to the geopolitical news flows. So all that in combination seems to be good. Sector specific actions are also happening. Like for example, metals have entered into a good phase, and a lot of metal stocks are showing some promise. So overall, sectoral pockets are performing better. So one need not be only a index trader Now, over the last few months, I would say that stock specific action has been the theme. So that's what one should expect for. And considering Bank Nifty, I was keenly tracking a close above 56,000 and the ability to sustain it. Just like 25,000 in Bank Nifty, 56,000 in Bank Nifty is very important, and that has been maintained. And I would say that in the coming sessions, the PSU banks have somehow taken some sheen from the private peers. And I would say that PSU banks could definitely be in the spotlight. And in that, Indian Bank is performing quite well. SBI is also staging better. But then Indian Bank, I feel, is a much better PSU bank. So overall, banking space looks promising. But then if you compare Nifty and Bank Nifty, to this week, Nifty has performed better. And if we cross 25,300 on the Nifty spot, then Nifty is going to take a very strong hold over the entire market.
Okay, all right. PSU banks, that is where we are most bullish on, Raja. But before we discuss more about the individual movers of the day, Raja, let's get in your picks also. What are you watching out for in this market? And let us know what are your top picks at this hour.
Yeah. So based on the recent movement and stocks which are showing some recovery from lower levels, I'm trying to concentrate on that. And from there, SBI card is a very good candidate. And I would say that one can buy it at the current levels with a stop loss below 895 for a target towards 950 within the next 2 to 3 days. And the other stock which I'm tracking is from the powers and cable space, which is KEI. KEI also you can buy at current levels, which is around 4260, and have a target at 4200 for an upside towards 4400 within the next 2 to 3 days. So considering the nature of the market, I have given a target zone based on the market action which spawns over more than one day.
Okay, all right. Those are the stocks we need to watch out for. But let's discuss the stock of the hour today. That is your TCS. But because it did report its second quarter numbers, where we saw that the revenue growth has risen after 2 quarters of decline, and profitability, however, that dragged due to the one-time restructuring expense that the company has undertaken. So in terms of numbers, revenue in rupee terms risen by about 4% on a Q-on-Q basis, and EBIT was growing about 7% on a Q-on-Q basis, while margins have seen a good expansion of about 70 basis points itself. Brokerages have also remained quite bullish on the counter, but they've remained quite watchful on the AI data center plans that the company has announced as well. We'll watch out for how TCS is reacting in open at this point of time. But yes, first rates coming on your screen. We'll address that first. 25,100, 150 mark. That is where Nifty has opened at. Very quiet and subdued start for the markets as of now. Sensex has also started off with about 96 points downtick. 0.1% cut coming in for there as well. Mid caps, however, is doing well, flat with a positive bias. Bank Nifty has also opened in the green, flat with a positive bias as well. But all in all, it's a very quiet and a tepid start for the markets, given that we also saw that the global cues have remained quite tepid overnight. Be it your US markets, that ended on a lower note yesterday. Asia Pacific markets have also started off quite negative as well. So all in all, it's a very negative start when it comes to the global cues as well, and that is why we can see some rub-off effect on Indian markets as well. Now let's take some of the sectoral actions. We'll talk about Nifty IT index first. 0.5% cut coming in there as well. The Nifty IT index has opened up with about nearly 0.5% cut, 180 points downtake after we did see some buying interest yesterday that came in ahead of the TCS numbers as well. Let's talk about some of the gainers and losers from the IT space, how TCS has been doing as of now. TCS, let's take a look at how TCS has been doing. Just wait a second. 1% downtick coming in for the counter after brokerages remained quite cautious. We did see that the one-time expense that the company has undertaken, because of which the profitability has been compromised. However, how the brokerages have been reacting, HSBC, they've given out a hold rating on the counter, while they believe that the AI capacity is a positive step, but more will be watched out for the counter in the upcoming quarters as well. CLSA has given out an outperform call. They believe that the company has beaten out on all fronts, revenue, EBIT, margin and orders, and they see better demand in the second half of FY26 compared to how the first half has fared. On the other hand, if you look at Jefferies, they have also given out a hold rating on the counter. They believe that the growth in key markets is yet to recover, and they've cut the estimates by about 1%, and they see 4% EPS CAGR in FY26 to 28. So it's a bit of a caution which is there on the street. That is why you can see that the sentiment has been weighing down on the counter. We did see that in the past 5 days, the stock has recovered from its 52-week lows, about 5 to 6% gains that the stock did make from its 52-week lows. But today we are seeing a bit of a profit booking, 1% downtake coming in for the counter. Raja, let's get in your views on TCS. What lies next? Today the stock is seeing a negative reaction, and what do you make of the numbers as well?
Yeah, like we can see, the numbers are slightly better than estimate. And the favorable thing which is working in TCS favor is the intent to move into the AI space. Now, what we need to see is whether the intention will be converted into reality, because that is a reality check which we need to see over the coming months. So yes, they have come out and they have made a claim of doing something on the AI space. And what we need to see is that looking at the kind of move which we have seen around 250 points from the low. So yes, it has made a durable bottom, but the ways ahead on the upside, I would expect that the stock could face some resistance zones around 3100. So those who have bought TCS in anticipation of this up move can consider a target zone towards the region of around 3100, which would be a good zone to book profits, because that's where the gaps are emerging. And I would say that overall the IT would wait for the entire result season to unfold before we see the trends ahead. Yes, IT index has moved sharply, and I feel that we still have around 1,000 points more in IT as a possible rise. Overall, the structure looks good. Overall, the sentiment is positive. But then looking at the rise which has already been factored in ahead of the numbers, I would say that one should not be buying TCS now.
Okay, not a buying price as of now for TCS. But yes, if you look at the benchmark index, once again we are back above in the green. Nifty has recovered back, and it is above that 25,200 mark at this point of time. Sensex is also showing good gains, about 100 points uptick coming in for the counter as well. Slowly and steadily we are recovering, but let's see whether or not the recovery is meaningful as well. But let's discuss another stock in focus, wherein that is your Tata Elxsi. The stock is down today, 0.5% cut coming in there, where the net profit has dropped by about 7% from a sequential basis, while revenue has grown by about 3% from a quarter-on-quarter basis. However, brokerages have remained quite negative. If you look at Kotak Institutional, they have given out a sell call on the counter. They believe that the revenue was beat, but profit was quite weak, and 5.4% of constant currency revenue decline is possible by FY26 as well. Avendus has also given out a sell call on the counter. They have cut the FY26 to 27 revenue estimates. They believe that the large deals in the first quarter and in the fourth quarter could drive growth going forward. But however, they remain quite cautious on the counter as well, and that is why you can see some drop. But right now the stock is off its day's low, 0.5% gains coming in for there as well. But yes, let's get in your view, Raja. What do you make of the results and of course the stock as well?
Yeah, Tata Elxsi has been under some bearish pressure, and yes, it has made a double bottom of sorts, and then it is trying to rebound from here. But then what one needs to consider here is that if the guidance itself is not very encouraging, then the up move which we are expecting could not manifest. So yes, the stock is looking promising of making a bottom, but then I would still wait for a while for the prices to settle down and the entire IT results to pass through before I take any decision. Because at the current juncture, IT definitely is looking encouraging, but then I would not place all my eggs into IT, because that's not the way I would play the IT space. Yes, the news has been factored in, so the way it is looking like positive trends are emerging on the result front, but I would wait for it to manifest on the prices.
Okay, all right. That's the view coming in for Tata Elxsi. Let's take one stock which is doing well, however, that is your ICICI Prudential Life. The stock is up about 1%, where we did see the company came out with its pre-quarterly update, And in the new business premium has risen by about 6% on a Y-on-Y basis. An annual premium equivalent APE, however, that is down by about 1% in the second quarter as well. But yes, the stock has entered a consolidation mode. Today it's however up by about 1%. Raja, can the sideways trend continue, and what is the next level that lies for ICICI Prudential?
Yeah, when you take a look at the GST rate stabilization and after the government initiative, the insurance companies did not really show some kind of positive traction here, and ICICI Prudential, along with the other insurance companies, so insurance companies as such has formed a unique sector itself over the last few years. I would see that the trend remains pressured, and every rise is going to be sold into. So even by the traders or by the holders, it would be chosen to exit. So yes, I would say that the overall larger time frames also indicate that the stock is in a consolidation phase, and this is not the right time to enter into ICICI Pru right now.
Okay, not a right time to enter on the stock. That is the view coming in for the counter as well. Let's take some viewer queries that is dropping on our live feed then. The first query coming in from Nana Prakasham is asking the view on Usha Martin on how the stock looks like. Raja, the stock has seen a good breakout, and of course it's trading at 52-week high levels. What is the next target levels that we can watch out for?
Yeah, the stock has been running quite swiftly, and if you take a look at the counter has been moving quite aggressively, and the way it's running right now, I would say that the next target will be closer towards 560. But then yes, it's not going to happen overnight or in the next month. Any pullback towards the 440 mark would be a good zone to buy into. So that way, one can participate if you're a fresh entrant. If you are a current holder, book profits, look at 440 levels to re-enter because the stock is definitely set for more upside.
Okay, all right. Set for a more upside for Usha Martin. That's a bullish view coming in for the counter. Let's take another viewer query. We have Debu K who's asking the view on Sona BLW. What is your view on the counter, Raja? Because the stock has entered a consolidation zone, 430 to 440. That is where it has been oscillating at.
Yeah, when you take a look at this counter, the auto sector itself has not given much kind of traction here. So what I would say is that I would wait for a while. I would see overall what is the trend, and then I would take my stance very carefully. Yes, overall the target sentiment looks encouraging, and if you take a look at the auto space, which actually behaved quite well after the GST rate stabilization. I would say that the bottom is made, and I would expect a target towards 545 within the next 6 months. And the stock is showing a reversal from the current levels. And we could, if the market is supporting, then that move will definitely unfold in the next few days.
Okay, that's the view coming in for Sona BLW. Let's watch out for that counter. Today, the stock is seeing good up move, 1.5% gains coming in for there as well. Raja, Debuke has been also asking the view on Titagar Rail on how the counter looks like, but the stock is stuck in a range after the good run-up that the counter has seen in the past couple of months. What would you expect for Titagar Rail? Today, the stock is showing 0.5% gains.
Yeah, Titagar Rail, I would say all the railway stocks, be it RVNL or RailTel, all these stocks continue to witness reactions in fits and jerks. And, it always invites people to get into it reminiscent of the earlier pattern. But I would say that some patterns are changing now. So one should not get stuck with the old pattern. So the stock would continue to range according to me. And I would say that unless and until it crosses around 1,000 mark, I would not be a buyer. So in case you have held on to the stock right now, your stop loss is a little further away, closer towards the 825 mark.
Okay, 825 mark. That is the view coming in for Titagar Rail as well. Let's take another viewer query. We have Nitin Shahji who's been asking the view on Vascon Engineers and how the counter looks like. Of course, the stock has been doing quite well in the past 1 month. We've seen the MOU with Adani as well, and that's why this counter has been doing quite well. Good breakout coming in, 52-week highs. Raja, what's your view on the counter? Can the bullish momentum continue?
Yeah, the overall sentiment is very encouraging, and with the real estate itself now coming out of the shadows with Bank Nifty and associated sectors like reality, NBFC, auto. So I would say that this momentum can continue. It was in the shadows for a while, and now it has come out with some positive tailwind. I would see that it can edge to a fresh high, but then it would take a while. So within if you expect the immediate targets will be closer towards 80, and further on it can be towards 95 within the next 1 year.
Okay, next 1 year, that's the horizon for Vascon Engineers. Let's take another viewer query. We have Shweta who's asking the view on ABB India because her buying price is at about 5,600. She's asking whether she should book losses or hold this particular counter. We did see that yesterday the stock had seen some reaction on after its robotics arm got sold to SoftBank. But yes, from a year-to-date perspective, the stock has been an underperformer, Raja. What would you expect the next moves to be, and what would you suggest her? Should she book losses at the current price?
Yeah, see, if she has held on the stock for a while, so I would say that your risk zone will be below 49.70. And with the current price trading at 5171, I would say that 49.70 is just 200 points away. So one can hold on with that risk point here. The stock has definitely made a bottom, but then it is waiting for some encouraging triggers to stage a rally. Now, this is the result season. So after the result season, still based on the result season, one can take the decision.
Okay, after the result season, we can take the decision for ABB India. Let's take another viewer query. We have Shweta is also asking the view on Geo Financial because her buying price has been at about 244 rupees, and she's asking whether she should book profits and shift to Shriram Finance and hold it. What should she do at this particular point of time? Geo Financial consolidating at higher levels. And she's seeing some good profit because the stock has been trading at about 308 and she's bought it at 244. What would you suggest, Raja?
Correct. Geofinancial is looking encouraging, and with the development of the joint venture between Geo and BlackRock, I would say that this stock will mature over time. So right now, the way the markets are positioned, none of the stocks are moving aggressively in any direction. So one should be careful while selecting the stocks. So yes, compared to Geo Finance, Shriram Finance is looking much more encouraging. So now exiting this and entering into Shriram Finance would also not be a bad ploy. That can also, because both are from the financial space, but then the encouraging triggers in Geo Finance is much more stronger. So one can take a decision of booking part profits in geofinance and ensure that they are able to ride the finance wave theme by investing that money or profits into Sriram Finance as well, because Sriram Finance from here on looks to challenge the recent highs and create a fresh high as well.
Okay, all right. Let's take another viewer query then. On that note, we have Alex who's been asking the view on Bharat Dynamics on how the stock looks like. Raja, we did see the stock crossing about 1600, but once again, it's back above that 1500 mark at this point of time. What would you expect the next target to be for the entire defense theme and, of course, for Bharat Dynamics?
Yeah, if you have been, everyone has been tracking the defense theme, and the defense theme largely moves on news and order news flows. So right now, BDL has not been able to sustain the upward momentum, and over the last few months, the stock has never been able to conjure up enough momentum. So I would say that amongst the defense plays, a name like HAL or BEL, they or even BML. So these stocks seems to be performing better, and I would say that if you want to play the defense names, those would be the names that you could track.
Okay, all right. That's the view coming in for the counter. Let's discuss about one particular stock in focus. The stock is seeing a bit of a profit booking. That is your GM Breweries. Yesterday, we did see a good September quarter results that came in for the counter, where the net profit has jumped about by 59% year on year. Revenue has also grown by about 22% year on year. EBITDA has increased by 61% year on year, and margins have expanded by 600 basis points. Raja, we did see a good breakout yesterday, settled with about 17 to 18% gains. Today, see the stock is seeing profit booking. What would you expect investors to do?
Yeah, overall, if you have already invested into this particular counter, then 18% jump on a single day, one can't expect a follow through on the next day as well. Then that means that the news has to be really stellar and continuing. So yes, you are witnessing some profit booking, but then if you see the nature of profit booking that we are seeing right now, it is not actually dragging the prices swiftly lower. So what has happened yesterday is genuine. So they are not giving up. So what it only means is that every pullback can be a buying opportunity. Now, looking at the nature of the price action over the last several months, the stock is set for better tidings here, and any pullback towards the region of around 840 would be a good opportunity to buy. In case you missed the bus yesterday, the stock has shown some good promise right now, and I would say that the entire alcohol space is showing some promise. Names like even Radico Khaitan is also one of the contenders here. United Spirits, Radico Khaitan, GM Brewery. So I would say that this space is now slowly developing into a more actionable scenario, and I would say that dip in the stock should be bought into, because buying at this juncture would also qualify deeper risk levels, which is dependent on the investor.
Okay, all right. That's the view coming in for GM Breweries. Let's take another viewer query. We have Manish Kumar who's asking the view on Tech Mahindra. Of course, the stock has seen good momentum in the past 5 days, given the entire IT pack has been buzzing. But yes, what is the next level that we can watch out for here for Tech Mahindra, Raja?
Honestly, like I said earlier as well, be it Tata Elxsi, be it TCS, be it Tech Mahindra, I would hold on, because the stock, each of these stocks have got some gap zones. So in Tech Mahindra as well, 3550 is an 1550 is an important zone of resistance. And the way the IT behaves, they are having a herd mentality. So I would wait for the entire pack to come out with its numbers and the decoding to happen before I take a call on any of them, because overall the IT sector is not showing as much positivity as the other sectors. So I would wait for the results to come out and then take a decision based on the performance.
Okay, that's the view coming in for Tech Mahindra as well. And of course, the entire IT team expected to remain sideways for the time being. Let's take another viewer query. We have Naveen who's been asking the view on Canara Bank on how the stock is expected to do. Of course, the stock has been holding up well today when we have seen two of its arms subsidiaries which has opened their IPO for subscription as well. Raja, what is the next move that we can watch out for Canara Bank? Good moves coming in from the past 1 month as well.
Yeah, so I have been covering this in all our sessions, that amongst the PSU banks, SBI, Canara Bank, and Bank of Baroda are my preferred bets. Now I've added Indian Bank as well. So Indian Bank, Canara Bank are definitely preferred amongst the trading community, and I would say that Canara Bank continues to perform well. And I would say that the constant, development of a bullish scenario, and on every dip it is seeing a buying opportunity. So I feel that a target towards 130 to 140 can be expected within the next 1 week. So every dip in this is a buying opportunity.
All right, every dip could be a buying opportunity for Canara Bank. Let's take another stock query. That is your coming in from Shweta. She's asking whether we can buy Nuvama Wealth at the current market price. What would you suggest, Raja, for the counter? Past 1 month, the stock has seen good traction.
Yeah, looking at the nature of the move, and if you want to enter November Wealth right now, it would be a little late in the game, because the stock has already run up quite a bit, and any reaction closer to the region of around 6,800 would not dent the move. Up move or recovery in this stock. So this stock is a buy on a pullback, and I would wait for closer towards 6,800 to buy into this, because at the current juncture, the stock is definitely showing a very almost near vertical rise, and it would not give me a sense of comfort if I'm going to participate in it right now.
Okay, all right. That's the view coming in for all the stocks that we have talked about. But with that thought, we have to let you go, Raja. Thank you so much for your time and answering our viewer queries.
Thank you. Good day.
All right, let's take a quick check of the markets of where we stand as of now for the benchmark indices, because we did see the Nifty reclaiming those 25 to 100 odd levels, and it's still holding up with that about 0.2% gains coming in for the Nifty as well. Sensex is also doing well, up about 200 points as of now. And if you look at Nifty IT index, however, it's showing a flattish move, flat with a negative bias as of now. Bank Nifty is holding up well after the profit booking that we saw yesterday as well. 0.4% gains coming in for there as well. Broader end of the markets holding up resilient, mid-cap and small-cap indices outperforming the benchmarks. And the pressure continues to be on Nifty IT index after the good up move that it has seen so far this week, flat with a negative bias. Metal and pharma stocks also come under pressure after yesterday being the top outperformers of the day as well. Nifty Realty Index doing well, 1% gains coming in there as well. And Nifty FMCG also seeing some good traction with about 0.3% gains. But with that, we'll move on to our next guest of the show. But let me introduce you once again to our Money Control Super Pro. That can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on your WhatsApp to help you trade and invest with confidence. So you can download the Money Control app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have VIKAS GUPTA, CEO and Chief Investment Strategist at Omniscience Capital, joining us. VIKAS, good morning. Let's talk about the stock in sector of today, that is your TCS. And of course, the entire IT pack. How are you reading into the results? We have seen some sequential recovery in terms of revenue after 3 quarters of decline. Do you believe that this could mark the end of the demand deterioration the entire IT pack has seen? And of course, how do you read into their AI expansion plans as well?
So, see, AI is the real driver of all these things, and we are seeing huge investments going into the AI data centers, right? And the GPUs was the story in the US AI sector, and that will drive in future for the Indian IT sector, but that's still some time away in our opinion. Okay, it's still not in the near term that next quarter there is going to be a huge AI related inflow into the Indian IT services. So that's the difference. And we have to be careful in jumping early into this. There is huge investments going. Once those investments start stabilizing and the clients start coming to the US-based AI platform companies, that is when the clients will need help from the Indian IT service providers to help them discover insights on businesses. So we would not think that there is a huge turnaround. Maybe there is a slight turnaround in the growth for the Indian IT sector in the near term, probably still single digits. But a year and a half to 2 years down the line is when we think major demand drivers would start being seen by the Indian IT sector.
Okay. Because what is the kind of a growth that you're estimating from the IT pack, at least from the upcoming quarters, Q3 and Q4 then? Anything that you're watching out for?
Yes. Not really. I mean, we think it's still single digits, maybe better than past, but not something very exciting at these valuation levels.
Okay, not very exciting at these valuation levels. Because let's also get in your view on which sectors do you think that will be the key drivers of the September quarter. I mean, TCS has just started off with its Q2 performance, but we are going to head deeper into the earnings season. And what are you seeing to be the key drivers of the September quarter?
So we think banks is where we are focused on. As a house, we are focused completely on the banks, private as well as PSU banks, and that's where we want to, or we hope to see some upward surprise. No?
Okay, banks is where you're betting on as well. Okay, let's also talk about pharma stocks, because yesterday we did see that they gained traction after reports of some possible tariff relief. Do you believe that the worst could be behind for the sector?
Things are starting to look positive, so that's true. But we can't take a call that everything is settled now, because if exports is the US exports is the focus, then we have to be careful. We have to be cautious. You know.
Okay, okay. Some
Things
caution
will
could be
change.
advised. Okay, okay.
Yes.
Because let's get back to your view on banks as well, because we've seen that the credit growth for majority of the pre-quarterly updates we saw for HDFC Bank as well, that the credit growth has improved, but deposit mobilization, that continues to be a lag. How do you believe that with rising expenditure and competition for funds, could this also be a long-term concern for banks?
No, we don't think deposits is the issue. The focus in banks should be more on the demand side, and as long as that is going on, the deposits or other ways of raising funds on the liability side shouldn't be an issue. RBI is on the focused on cutting interest rates, so there should be not an issue. I mean, deposits is not the only way banks get money, right? I mean, so there are many other ways. So we wouldn't be concerned about that.
Okay, all right, all right. Let's take in your view for FMCG majors as well, because they're likely to post a soft quarter amid the inventory destocking on the back of the GST reforms. But do you expect the sector to remain range bound in the upcoming quarters, or is there room for a pickup ahead?
Pickup is difficult because, in our opinion, even despite them having subdued performance in terms of stock price, the growth rates are single digit, valuations are extremely high even at this levels. So even if there is a little bit of volume pickup, we think the valuations don't justify it moving upward too much. So we are not very excited about FMCG as an investment opportunity.
Okay, okay, okay.
We would rather, people chase it because of the consumption focus. And consumption, we think there are other ways of playing consumption, as in through the banking or through the transactions or through credit cards or other kinds of financing.
Okay, okay. But Vikas, apart from banks, anything else that you are most bullish on at this point of time?
Yeah, so we like housing finance, we like power, we like defense and railways, and we like EPC, infrastructure. So there are a lot of other sectors we like in today's market.
Okay, okay, all right, all right. And anything that you're watchful at this point of time, because you did mention that IT and pharma could remain as a cautious point, given that it's an export oriented. So, is it all domestic going to be for the upcoming quarters, and of course, so far this year as well?
Yeah, yeah. I think everyone should be really focused on domestic companies, domestically oriented businesses. Yes, the risks globally are reducing, but we would rather focus on insulated businesses which are available at good valuations. Yeah.
Okay, okay, all right, all right. Let's also talk about gold as well, because we have seen that gold as a bullion has been seeing record highs, but jewelry stocks have not been faring well. Yesterday, we did see that Senco gold stock also did not fare well on the back of its pre-quarterly update. But would you believe that the festive season, the Diwali season and wedding season could revive the sentiment in the jewelry companies, or what are you watching out for?
It's very difficult at these gold prices. The consumer demand is absolutely based on the bare essential demand, was what they have to spend. The jewelry input costs will go up and the demand side will go down, and so it's difficult for the jewelry market today, we think. Only the bare essential demand, whatever people need to purchase barely for a wedding or for Diwali or whatever, that's what they will purchase rather than what they would like to have purchased. So little bit of struggle there, I think, for the jewelers.
Okay, some struggle could be anticipated. But how are you seeing this flows that is panning out in the primary markets more than the secondary markets? Do you see this as a concern for the medium term, given that FIIs are more convinced that there is more value that could emerge in IPOs instead of our own secondary markets at this point of time?
Yeah, so FIs probably are working on a different kind of analysis, but we think there is value in the secondary market most of the time rather than in the primary market. And we would focus on the secondary market where there are huge mispricings. In the primary market, usually, it's difficult to find good value drives, right? The pricing, etc. Valuations are extremely optimistic.
Okay. Because if you look at the industry OM, that has risen by about 7% for the September quarter. But in the first 9 months of so far this year, the demat account additions that have fallen by about nearly 40%. So what is actually keeping retail investors away? Is it the valuations, the trade standoff, or is it the earnings slowdown? And what can actually reignite the retail participation back into the equities?
Yeah, so retail is very simple, right? When markets are up for continuously or consistently for a few weeks, then the interest comes in and people start trying to open new accounts, etc. This is, I mean, I'm talking about the new investors, right? We are talking of increasing new demat accounts. So already we are at a very large number of demat accounts. And so the marginal investor who's still out of the market, he needs to see consistent, he doesn't understand markets, right? He needs to see that Sensex or Nifty is going up consistently for several weeks and it's in the news, and only then that interest is picked up. And so we think that a consistent up move for a month or so is required before the old drivers, demand drivers will start coming in for demats.
Okay. Because if you look at the contrast, however, the equities have underperformed, while if you look at bullion, silver and gold ETFs, they have actually been the standout performers for so far this year. Do you expect the next couple of months also to remain the same, or how do you see this contrast playing out going forward?
Yeah, so gold is tricky right now because it's not just the market demand. I mean, the central banks are buying, and we don't know how far the central banks will go to readjust their treasuries from away from USD and into the gold. And if they continue consistently, then we cannot say that the gold demand is over. With other commodities, we would be cautious. But with gold, it's difficult to say that the demand is over.
Okay, gold is expected to remain in focus as well. All right, with that thought, we have to let you go, Vikas. But thank you so much for your time, and we hope that we connect with you soon.
Thank you. Pleasure to be here.
All right, let's take a quick check of the markets of where we stand, because both the benchmark indices had recovered and flipped into the positive territory, and Nifty is once again holding above that 25,200 mark. If you look at the rates as of now, Sensex is also doing well. Sensex is showing a gain of about nearly 200 points as well. Let's wait for the rates to freshen up. 300 points coming in for Sensex as well. And Nifty is also above that 25,250 mark. We have already broken past that 25,250 mark earlier that we were working with in terms of resistance levels. What is contributing to the Nifty's up move? However, let's take a look. Broader end of the markets, they remain quite resilient. Both the small cap and mid cap indices are showing good gains. Mid cap index, however, it's seeing a gain of about 0.3%. IT index has trimmed some of its losses. 0.1% decline coming in for there. On the other hand, metal counters are seeing some pressure as well. Pharma index has flipped up into the positive territory after some selling pressure we did see in the initial minutes of the trade. Flat to a positive bias there. That is where the Nifty Pharma index has been. Auto index has also been doing well, 0.3% gains coming in there as well. Nifty Realty holding up and extending the gains to about 1.4%. And on the other hand, if you look at the FMCG basket, that also remains in traction with about 0.4% gain. On the gainers and losers front, Axis Bank seems to be doing well. ONGC, SBI Life, they seem to be holding up well with about 1% gains. And on the losing end, we can see some steel stocks and of course the metal counters, which yesterday did see some good traction. They are seeing some profit booking today with about 1% cut that is coming in for there. Hindalco also seems to be not doing well with about 1% cut. TCS and Tech Mahindra, some of the IT stocks also are seeing some profit booking today with about nearly 0.8 and 0.3% cut coming in there as well. So all in all, we have extended the gains today. Whether or not this gains and gets extended and the momentum sustains throughout the day, we'll be understanding in the close. But with that, let me once again introduce you to Money Control Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. You can download the Money Control app and subscribe to Super Pro today itself. All right, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 for closing, and we'll understand from our experts about how the market texture has developed, and we'll also be discussing about the stocks that grabbed the headline. But until then, signing off.